Hello, this is Jordan, and this video is being recorded on the evening of Tuesday, February 23rd, 2021. Thank you for joining me. And before we get to the video, if you're watching this on YouTube, please subscribe to my channel so we can get this and future videos out to a wider audience. Thank you. In this video, I'm going to discuss why Bitcoin and crypto are not hurting gold. So obviously, as gold has struggled in recent weeks and months, and Bitcoin has gone parabolic or vertical, again, there's talk about Bitcoin eating gold or hurting gold. And last we heard this talk was in 2017 when Bitcoin also went vertical. But since then, I think gold has done okay. But more than that, I want to look at a bunch of different markets and get into why this shows us that gold isn't really being impacted, or if it is, it's only by a minor amount. So here we plot the NASDAQ, Bitcoin, and then the US dollar in the middle, followed by gold, and then real yields at the bottom. So over the past 5 years, Bitcoin has been mostly correlated to US dollar weakness. And after that, I'd say followed by the NASDAQ/stock market. And then only a little bit behind that is gold. So I consider Bitcoin to be, it's really a combination of a currency and a tech stock. And looking at the Bitcoin chart, you can see the two big moves. You have since last March, and especially in the last couple months, and then you have throughout 2017, where it had that major peak at the end of the year in December. So, and the vertical lines that you can see, those are showing when the dollar started its decline and when that ended. So just basically throughout 2017, that was a strong decline in the dollar. And then also since the COVID low in March. And it looks like the dollar, it's had a bit of a rally. Maybe it's rolling over again. But you can see there the big declines in the dollar, and that coincided with the two vertical moves in Bitcoin. Because it had a big correction in 2018. 2019, it moved up, then went sideways. But obviously, it was still a far way from the late 2017 peak. So you can see there that dollar weakness was really the main driver for those huge moves in Bitcoin. Now, at the same time, the NASDAQ did very well. These charts are they're not logarithmic, so you can't see the percents. But I think that move in the NASDAQ when the dollar declined in 2017, I think it was about 45%. And obviously, it's up over 100% since the March low. So we can see right there, that's evidence that Bitcoin is acting like a dollar alternative, like a currency, but also somewhat like a tech stock. And if we look at gold, it's very interesting because during the last two big declines in the dollar, gold has not performed that well. So go to the bottom of the chart, look at gold, and I guess gold did perform well in 2017 during the dollar decline, but that's because it had a significant low at the tail end of 2016, but it did not break out. It wasn't able to break out from that base, at 1375 resistance. And so gold was just being pulled up by the weak dollar, but I don't consider it that great of performance because it didn't break out when other markets were surging and performing much better than gold. And so during 2017, gold wasn't the best performer because you can see their real yields, and that's the 5-year real yield as measured from the TIPS market. The real yield was rising. And let's go to the dollar decline since the COVID low. Now, the beginning of that, gold was well, sorry, let's go to the real yields in the gold, the move in gold since the COVID low. So you can see real yields came down. They've come down dramatically. And so gold made a huge move. But look at when gold peaked. So gold peaked at the very beginning of August. Real yields had stabilized, rallied a tiny bit, basically until December. And then they broke down again. And, late November was the time we had a rally in gold and also gold stocks. They rallied into the first week of January before rolling over again. So it's really only been, and we can see in the last little bit, real yields have gone up a little bit. So it really was only for like a month or a month and a half where gold was a little bit disconnected from real yields. So aside from that, I mean, gold, I talk about this all the time. Real interest rates, real yields, that's the biggest driver of gold. It's not the U.S. dollar. And just look at this over the last 4 or 5 years. The evidence is right here. And gold also, it tends to move in advance of moves in the U.S. dollar. So it tends to lead the U.S. dollar. I mean, it can lead by a quarter or two. So that's what we see. I mean, the gold, other than recently for, call it 4 to 6 weeks, maybe gold should have performed a little bit better given how real yields have declined. But gold could also be its struggle. It could be discounting. It could be looking forward for more, anticipating more of a rebound in real yields as yields have been surging recently. So, okay, I know that's a lot to take in, but thankfully here are the takeaways that you need to follow. Okay, number one, gold follows real yields. We can see that gold is inversely correlated to real interest rates. Secondly, Bitcoin is following the dollar inversely. It has been more connected to dollar weakness than gold, actually. And third, Bitcoin has essentially been, I guess you can call it a technology and a currency, some combination of that. That's what the performance shows. And so finally, there's little evidence here that Bitcoin is hurting gold. And the reason for that is, you could say other than the last 4 to 6 weeks, where maybe gold should have performed a little bit better, there's no time when Bitcoin has been taking away from gold. So the times that gold has not performed, there has been a fundamental reason for that. And so recently, for the most part, capital has been flowing into other areas. And just because that's happening, that's also bad for gold. And people get optimistic about other investments, that's also bad for gold. So, in conclusion, I'm not worried about Bitcoin or crypto eating gold or taking away from gold, because there's no if there's evidence of that, it's on such a minor scale, you don't need to worry about it. So that's all for this video. Check out my work at TheDailyGold.com. Check out the free information, the links under the description. And I thank you for watching this video. Let me know what you think, and I look forward to publishing another video update in the days and weeks to come. Thank you.